Okay, welcome guys. We are live. We are going to be training how to trade Forex. This is for beginners and some of you who have never traded Forex before. We are going to go through the steps A to Z, nothing left unturned. So please take your cup of coffee, your popcorns, and sit and relax and take notes. By the time we finish this live, you will be ready to trade Forex. Okay. And we're going to set up a plan on how we are going to make enough money come to the next year so you guys can plan on how to quit your jobs. Okay. Sounds nice. It is doable. But before we proceed, let's put a disclaimer. Whatever I'm going to share with you guys is not financial advice or investment advice, and this is not a get quick rich scheme. It's going to require some learning. Okay. You're going to learn the skill. Okay. Promise me you're going to learn the skill. You're going to practice on the demo. If you have never traded before, practice on the demo. And that if you are going to be trading, you're going to risk only money that you can afford to lose. If you can't afford to lose it, don't risk it. Okay, let's begin. Courtesy to my students, I have several students on here who are going through our Forex Trading Masterclass. And courtesy to them, we are sharing this live for free with the masses. And we're also going to have the replay on YouTube on the Smart Wolf Club channel. So if you have not subscribed to our channel, make sure you subscribe, like this, and share. And if you have any questions, you can leave comments below, or you can join the social media groups and you can start asking your questions. Okay, guys, we don't want anybody left behind. And if you need our help, we are only a DM away, a message away, an email away, a phone call away. We are right there, right there. Now, who are we? We are the Smart Wolf Club members, and there's a lot of coaches from all over the world. A lot of our students are from all over the world. We have students from countries where they live under $1 per day. We have a lot of students from countries where $1 per day is nothing. So we have a variety of all kinds of. So behind the scenes, we see all kinds of students, and we have coaches from all over the world. Tajimoto is on here from Tokyo, Japan. He's been in the Smart Wolf Club for over 15 years. We have Mr. Singh from Bombay, India, with a huge group, and he's been with us for over 17 years. Some of us have been online since 1998. Yes, 1998. You had that correctly. So we'll be sharing our experiences. We have coaches from all over the world. If you go to the United States, we have coaches from Atlanta, Georgia. Mr. Baker is on here over 15 years doing this stuff. If you go to Sacramento, the Bay Area, you meet Mr. Jose in Sacramento, California. He's been with us for over 15 years. If you go to New York, New York, you meet Anne Marie. She's been with us for over 15 years. If you go to uh, Florida, Southern Florida, you're going to meet some of our coaches there. We have plenty of them. Now, guys, I don't want to mention all of them. It's going to be like a whole 1 hour maybe. If you go to Singapore, you're going to meet Wuhan, one of our coaches. She's been with us for over 15 years. If you go to Sydney, Australia, you're going to meet Josephine, one of our coaches. She's been with us over 12 years. If you go to Dubai, you're going to meet Ahmed, Dubai, UAE, you're going to meet Ahmed. He's been with our coach for over 8 years. If you go to Africa, you go to Cape Town, South Africa, you're going to meet Malemala, who's been our coach for over many, many years, over 15 years. If you go to the western part of Africa, Moses in Lagos, Nigeria, has been our coach for over 15 years. If you go to cross to Europe, England, UK, you're going to meet Mr. Scott in London, over 17 years. If you go to Berlin, Germany, you're going to meet Karinses. She's been in the group for over 15 years. If you go to Denmark, you're going to meet Jorgensen. He's been there for many, many years, 15 years. If you go to, let's say, South America, Brazil, Rio de Janeiro, you're going to meet Rodrigo. He's been in the group for over 15 years, and many, many, many others. You go to Mexico, you're going to meet, oh man, Romero from Mexico City. He's been with us for over 13 years, and a lot of coaches, guys. So, guys, let's begin. Okay, so I'm going to move this to the sides so we can share our, we're going to share our, let's go back here and let's share our screen. And so I was just waiting for all the students to get on here. I think they're on here, all of them now. So let's go and share our screen. Bada boom, 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 bada boom. Share the screen, share the screen. There we go. So I'm gonna become tiny. I'm gonna become tiny somewhere in a corner. There we go. And and you guys can see this is where we are. So first, there are several resources that you need. Okay, so if you look under in the description, we have put a few resources for you. So you're gonna need to open your TradingView account. Okay, if you're gonna be trading Forex as a beginner, okay, you're gonna go to this right here, this link right here, which says TradingView. So click that link. Okay, that is our affiliate link. For those of you who are going to subscribe, if you subscribe, we get a small thank you from TradingView. It doesn't come from you. Okay, for those who are going to go the professional way, professional, you have to subscribe. You pay monthly, and I'll tell you the advantages. But for now, as a beginner, you can go the non-professional way, which is free. Okay, so you're just going to click that non-professional way. But we already have an account. My student already has an account, so you're going to go the non-professional way, so you can keep your credit card away. But here's the link. Just click that link. So you're going to need TradingView. All right. So once you click TradingView, once you sign up, you're going to need your name and your email address. Once you sign up, you'll come to this platform here, which is called TradingView. Okay. So if I go back and I go out of TradingView, you see right here, you're going to go to products and you're going to go to super chats. Okay. Again, once you are done with signing up for TradingView, okay, so where are you going to get the link to sign up? Right here below in the description. This is one of the resources that you need, guys, okay? You're going to need TradingView. We're going to spend a lot of time on TradingView, okay? So you can find it below this video. For those of you who are going to watch the replay on YouTube, and for those of you who are live right now, it is in the description, okay? You go right here where it says open your TradingView account here. So you click that link and it's going to bring you here, okay? And you are going to go non-professional, okay? Unless you want to go professional right away, you can. I'm going to tell you the advantages, okay, for going professional. And you can see here are the costs, here are the charges. 12.95 monthly, okay, which is like 155 per year, or you can do the plus or the premium for those of you who want to do all these extra charts. So if you get really serious with your trading, sometimes you want to open several charts at the same time. If especially you're trading, we have students here who are experts in trading stocks, forex, crypto. You can have all these charts running at the same time. I'm sure you've seen some of the gurus displaying massive charts open all over several computers. Then you can have this premium, okay, which is 49.95 a month, about $50 a month. Or you can have the 24.95 plus. This is the monthly, and here you can work with four charts. You can use indicators. We're gonna dive into all this, and so by end of this training, you'll understand what I'm talking about. Okay. But for now, you can go with the non-professional, which is will be free. Okay, right here. So non-professional will be free. If you want to go pro, then we're talking about even more serious expenditure. Now, pro is for people who are pro. You have so many charts, so many indicators, several alerts, technical alerts, parallel charts, all kinds of stuff. So some people are seriously into trading, and it can show you the advantages and the disadvantages. Okay, so for now, you're going non-professional and you are not gonna go monthly. You want just the free one. Okay, the free. Okay, now once you have uh, your TradingView account open, the other resource that you may need is a Forex trading account. Okay, so we have put a few of them here. One here is HANKOTRADE. Okay, so there is HANKOTRADE here. You can open your account right here. So you can click that, it will open up, and you are going to enter your name, your email address, and you are going to sign up. Okay, and I'll show you how this becomes handy. because you need a trading platform where you're going to be trading. Okay. So let's go back here. I'm going to close that, and let's go back to TradingView. So once you are on TradingView, you're going to go to the super charts. Okay. Once you have your account open, you go to the super charts. So once you click the super charts, it's going to come here directly because we have already opened a trading chart here. But for those of you who are going into Forex, so you can come to Forex, okay, and you can see all the different Forex pairs. Okay, so there are various pairs here. Okay, there are many pairs. Okay, a lot of students trade different pairs. Okay, the reason is because when you are trading, depending on the time that you are trading, okay, where you are located in the world, certain currencies will be moving during that time of the day. For example, if you are trading during London time, okay, London trading time, okay. So different time zones, because depending on where you're located. Some people are, let's say if you are in Africa and you are trading London markets, London time, then you're probably going to be favoriting currencies that move during London time. If you're trading during Tokyo Open, then you'll be looking at currencies that favor the Tokyo open market, like say the JPY, the Japanese yen moves a little bit first, moves more during Tokyo when Tokyo is open, because these currencies represent different countries. Okay, you can see the Euro USD, for example, that is a pairing between the Euro and the United Dollar, US dollar. Okay, so that means when the European market is open, the Euro will tend to move. Okay, uh, we know the USD is universally traded, but what I'm trying to tell you is that the time you trade, the time you are spending to time to trade will determine which pair you will be trading. Okay. Now, if you're trading the US New York Times, the US market, then of course, when the US market is open, a lot of these currencies move because there is a lot of uh, volatility, a lot of trading taking place during the US Open, and that's why you find most of these currencies actually move. So during the US market, you can actually trade a lot of these currencies. Now, the Australian dollar, again, that when the Australian market is moving, is open. So if you're looking at the Sydney time, you're in the Sydney area, Sydney time, you're probably going to be favoriting the pairs that feature the Australian dollar, AUD, USD, for example, and things like that. Now, for you, if you're not familiar with um, the trading times, you can go to this resource here. I didn't share the link, but those of you who are live and those, you can go to Baby Tips, okay, and you can start your education right here, babytips.com. Okay, so you open babytips.com and you can go to tools. Okay, so again, you go to babytips.com. Okay, I didn't share this, so go to babytips.com and then you go to tools, and you can see there's a lot of tools right here. Okay, because a lot of beginners get lost, when we start diving deep into what are pips, what are lot sizes, what we mean by position size, how do I calculate my size, how do I calculate how many pips to put my stop loss or my take profit, position sizing calculator. So Baby Pips gives you those tools right here, okay? And you can come here and you're going to use them for free, okay? You can join right here, okay? Sign in if you already have an account. If you don't, just join your name and your email address, and you can go to tools, and then you're going to go to Forex market hours. So if you click that, you see this chart here shows you the different market times and positions. So you can see, like, right now it says it's 1:45 p.m. and you can see the New York time is green. You can see it right here, and it shows you when there is more volume, trade volume. You see, this is like the peak around here. If you move this guy here, you can see that's the peak around 11. a.m. That's Eastern Standard Time. For those of you who are in the United States, you can see that that's the time when it's very, very strong. So you can see the different trading, the different time zones. There's Sydney, there's Tokyo, there's London, there's New York. So again, here you can put your time zone. Okay, so for those of you who, let's say down in London, okay, so if you're in London, for example, you can see now it shows you the time in Sydney and it shows you what is going on right now. So you can see your London session is closed, Tokyo session is closed, Sydney session is closed, the New York session is open right now. So if you want to trade the New York session, again, as I said, the New York session was probably going to move a lot of the pairs, okay? Whereas if the London session is open, you're probably going to be moving the European currency pairs, the ones that feature the European currencies like GBP, which is the British pound, the euro. Okay, so the euro and the GBP might be moving faster and faster during London session. Okay, again, on the other hand, if you're looking at Tokyo session, for those of you who are trading the Tokyo session, again, it might mean like the pairs that feature the Japanese yen might be moving more at that time. So if you are ever going to be picking up a pair to trade, if you're going to select which pair to trade around these sessions, you're probably going to have a bias towards the currencies for those regions. Okay, it goes without say. If I decide to trade London session, I'm most likely going to be focusing on a pair that has the euro or the GBP, the British pound, right? Or any other European currency, the Swiss franc, the Deutschmark, or whatever pairs that feature feature the European currencies. Okay. Now, if I'm trading Tokyo, I'm looking at the Asian market. So most likely I'll be looking at currency pairs that feature the Japanese yen and any other Asian currency. Again, with the Sydney uh, session, I could probably be looking for the Australian dollar and the New Zealand dollar. These two pairs would probably be moving a lot more during this time. Now, during New York session, the US dollar would be moving a lot, the Canadian dollar would be moving a lot, but at the same time, as I said, the New York time has one of the greatest volumes, and you can see around that time, most of the pairs will be moving. So you can pick up, you can choose any pair around this time. Okay. So, any questions on that, guys? Any questions? And we go deep into this time zone trading in our masterclass. Okay, if you want somebody to handhold, like our students are on here, and courtesy to them, we are having this free session. But I can most likely not be able to go into all the details because it's going to make this lecture many hours long, 24 hours, which I'm sure most of you don't have. Most people don't have patience. Most people have the patience of the goldfish, microwave mentality. Most people want it quick. I've seen, we've been training for many years, so we see this in the background. A lot of students don't have the patience, okay? And you forget that the master teacher says, patience, blessed are those who are patient. So you got to be patient. You got to learn first, learn learn the skill, okay? Give yourself time to learn the skill. Now, what am I saying? We are in a journey, okay? We are not at a destination yet. If I was at a destination, I would not be here teaching, okay? I would be somewhere, maybe at a beach, sipping mojitos or trying to climb the Himalayas or trying to hike the Machu Picchu or somewhere, some trail, because I'm at a destination. I will have arrived, but we are on a journey, and that's why we tell you guys to come and learn the skills with us. Join the group, the Smart Wolf Club, and you can join the Smart Wolf Club right here below the. In this video, you see this link that says click link below to join the Smart Wolf Club. Okay, so you can click that and it's going to open up a place where you can join. So you just join our master classes. They're right here. All you need is your first name, your email address, join the master classes, okay? And when you go there, you're going to pick the master class that you want to do. We teach everything plus everything included. Everything included. No cards under the table. Nothing is hidden under the table. All the cards are going to be on the table for you to pick. Okay. And it's very important that you learn the skill. Okay. Because whatever we are showing you here, I'm sharing with you guys, is not some quick it's not a get rich quick scheme. You got to learn the skill. If you want to change your life, if you want to join us in this journey, because we started this journey, so we want you guys to join us so we can move together. Okay, and we're going to teach you and share our experiences. The coaches are going to be in there, coming in and sharing and pouring unto you. The master teacher says that if you learn something, if you believe in something very, very strongly, learn everything about what you believe in, practice and teach. So our coaches are in the trenches. Whatever they teach you is what they do every single day. They're taking the trades, they're using the platforms that we are showing, and everything that we do. So we have the Forex trading masterclass, we have the crypto trading masterclass, the stocks trading masterclass, the options. Some of you want to go into digital marketing, and we have the masterclass there. And some of you just want to know about your markets, the emerging markets, new markets, how you can just improve your overall wealth, financial well-being. You can pick up the bundles that talk about financial stuff, and the coaches are going to be there helping you guys. Okay, so you're welcome. You're most welcome to join this and join the group, join the Smart Wolf Club, so you can start becoming a smart wolf yourself. Okay, so let's go back to the training. So once you have your TradingView open, okay, you have opened the account. So today, one of your assignments right now, for those of you who are on here for the very, very first time, okay, I have students who just joined the Forex Trading Masterclass, and courtesy to them, we are sharing this with the public. So they are doing this for the first time. So go ahead and open your TradingView account. The link is right here where it says open your TradingView account. Click that link, whether you're on mobile phone, whether you're on a desktop, it doesn't matter, iPad, tablet, go ahead, click the link. As long as you have internet connection, go ahead, click that link, okay, and sign up for free. Okay, now if you want to enjoy some of the extra features, you can sign up for a plan, a subscription right here. And this is an affiliate link. So if you sign up for one of these, we get paid a commission by TradingView. Okay, it's a thank you for referring our students to them. Okay, and they give you a lot of resources. They give you training on how to use their platform. They give you all the hand holding that you need, guys. Okay, so right now, as you can see, we are here, TradingView, and then the next one we talked about, a next resource that I said you need to go to is babypips.com. You can bookmark that. So once you go to Baby Pips, okay, let's go back. What? Because a lot of you is showing some confusion now. So already, let me see by the show of hands on the chat, how many of you have opened your TradingView account? Okay, keep those show of hands coming. Put a 1 if you already opened your TradingView account. Okay, I see almost all the students already have. And those of you who are watching live or are going to watch on YouTube, the replay, please go ahead and take a moment, pause the training, go and open the TradingView account. We're going to need that, okay? For you to succeed in any form of trading, we're going to need the TradingView platform, okay? We're going to need it. Trust me when I tell you that. You're going to need the TradingView platform, okay? So then go to babypips.com. Again, this is a free resource. Once you're on there, you can sign up for free if you like, or you can just come to the tools. Now, we're going to be using some of these tools right here. Okay, so you can go to the tools, and right now we are looking at our discussion was what is the best pair to trade. So that's going to be determined by the zone, the time zone that you are in, and your availability. Because I know some of you are only trading part-time because you have full-time jobs. So you'll be trading when you come home. So let's say for some of our students who are in the United States, you come home after 5 o'clock. So that means the New York session is actually closed. Okay. So then you are left with Tokyo session and London session, which comes up much, much later. If let's say you are in the US, the London session might be coming late at night. Okay, so depending on the time that you want to trade. So if you want to trade the Tokyo session, we can go to tools, and then we call it Forex hours. Okay, so we come here, and you can see if you pick, let's say I'm going to pick the New York session because that's like the main US market is open in New York session. You can see the New York session has a lot of volume, and you can see the volume is right here. The highest volume is around 11 a.m. It opens around 9:30. You can see around 9 there. But the session, you can see, starts volume starts going up here where it is green from 2:47 a.m. That is when the London session is open. You can see the blue is the London session. So once the London session is open, you guys can see the volume is massive. Okay. So from 3, actually it says from 3 a.m. to this side here, which is 2 p.m. We can see it is all green, and then the New York session closes at 5 p.m., which is Eastern Standard Time. So now you can choose your time zone. So let's say for those of you who are in, let's say we have students on here from Rio. Mr. Rodriguez is on here from Rio de Janeiro, one of our coaches. He has a huge group. Let's say if we put Rio, again, you can see it tells you the highest volumes are from 4:16 a.m., 4 a.m., okay, to this time here. You can see this is around 3 p.m. Okay, so from 4 a.m. to 3 p.m. That is for those who are in Rio. Now let's see. We have students from a lot from Cape Town. Malemala, one of our coaches, is from Cape Town, South Africa. Let's see. Do we have Cape Town here? Do we have Africa? Let me see. Where is Africa? Africa, Africa. We should have everybody on here. Maybe not. I don't know. There's Dakar, Mumbai, Moscow, Cairo. Cairo is in Africa, right? Yeah, North Africa. Okay, see, Cairo is GMT plus 3. You can calculate your time. You can do a Google search to see in terms of GMT, what is your local time. You can do that. You go to Google, put in your time, and you can match the time with, let's say, New York um, or the GMT time. And you can see, like Cairo, for example, is a GMT plus 3. We have some students from Cairo in Egypt, and you can see we have one of our coaches from there. Abdassa is from Egypt, Cairo. Abdassa, how are you? He's been there for over 5 years with the Smart Wolf Club. You can see. So now for Cairo, you can see your busiest time. The greens actually start from here, which is what, 10 a.m. From 10 a.m. between 10 a.m. and 9 p.m. Okay, that's the highest time for you guys to trade between. You can see from Cairo, you can start from 10 a.m., which is London time. 10 a.m. is London, I think. Yeah, opening of London session. So London session for you guys to New York. So now London session means you'll be trading the European pairs, for example, the Euro, the GBP, and also. So if that is the time that you are available to trade because of maybe work or commitments, because I know most of our students are doing this part time. They have their 9 to 5s. Some of them are professionals. We have students who are doctors, nurses, engineers, stay home mom, teachers, students, drivers. We have all kinds of people, landscapers, carpenters. So, depending on which part of the farmers, I mean, we have people just, yeah, hustlers, they call themselves, so, doing all kinds of stuff. So, again, you can come and play around with this tool and find the time that is best for you to trade. Now, once you found the time that you want to trade, if you want to trade London session, then of course here you're going to be looking at the pairs that you want to trade, and you can choose the pair. So for example, one of the favorite pairs that we like to trade is the GBP JPY, that is the British pound Japanese yen. Now, if you're trading this during New York time or the US time, again, this pair moves. I told you with the New York, the pairs move really, really first. Okay. So once you have your pair up here, because you guys saw what I did, you come to Forex and then you're going to pick your pair. So for example, we are doing the Japanese, no, the British pound Japanese, and we're going to take that. So we choose one of those, and there we go. And then what do we have here? You can see what are these colors? These are candles. These are called candles. There's a green candle, meaning that it is going up, meaning you buy, or a long trade, means the asset started from down here and it closed up here. So that means the price went up, the pair went up. That means the British pound, GBP, JPY. So when it is green, that means the GBP is stronger. Okay. There is a court current and there's a base current, the base currency, court currency and base currency. Now, these basics, we go through them in the in our Smart Wolf Club, the master classes. We go into all those details, explaining the majors, the minor pairs, the major pairs, the exotics. But in a case like this, we have two majors here. We have a British pound versus the Japanese yen. So we have the court current against the base current. So when the court current is stronger, you can see it is going up. When the base current is stronger, you know this goes down. So when the Japanese yen is stronger than the British pound, you're going to get red candles forming. It's going down, okay? That's basically what is going on here. So when you look at these candles, they do tell a story, okay? And depending on the time frame. For example, here, you see this plus sign here, the intervals. You can choose the intervals. You can see we start from 1 minute, 2 minutes, 3 minutes, 5, 10, and you can customize this, okay? And once you have TradingView, you can watch the video that shows you how to customize all this. I don't want to go into those details. It's going to take a whole. We're going to make this lecture 10 hours or 3. I mean, we go into those in our masterclass. So if you're getting confused, simple YouTube search will show you how to set up your um, TradingView, and they do have very elaborate videos over the shoulder that show you how to set all these times. But for most of us, we use this default setting. You can see it says 1 minute, 2 minutes, 3 minutes, because there are people who are going to come here and be scalping. Scalping meaning they are taking quick trades, quick scalps, get in and get out, get in, get out. So they'll be trading on these very low time frames. Okay. So let's say if it's a 1 minute chart, you can see each candle here represents 1 minute of the trade time. Okay. Each candle here represents 1 minute. Okay. You can see that each candle here is representing 1 minute, and it's showing you in 1 minute. You can see this is shooting up. You can see the green forming here, shooting up. That's exactly what's happening. So in this 1 minute here, the British pound is getting stronger. You can see it is green. The British pound is getting stronger than the Japanese yen, even though you can see it is clearly a downward trend. You can see it's like from here all the way down here, it is a downward trend. That means the Japanese yen is much stronger. So the bias is actually a downward trend. So I'm likely to be taking what we call the sell, the short trades. I'll be taking the short trades in a case like this. Okay. But that bias is formed from my observation on the movement of these candles. So candle patterns, I'm literally looking at the candles and making a decision that this is more of a downward trend. And the chances are high that it is a downward trend. Now, how am I going to take the trade? I'm going to risk a certain percentage of my account. And that is where these tools become very, very handy. When I was talking about how are you going to decide how much to risk if we are trading. Now, this risk thing is very important because this is what's going to make you or break you. Okay. So we have the trading tools here. We have currency correlation calculator, Forex markets, risk on, risk off meter. You can watch all these things, gain and loss percentage calculator, peep value calculator. So how many pips am I going to risk? To make it simple for most of you guys, let me just simplify this. I'm going to bring up something new here. So let's say 10 pips. Anytime there's a 10 pip movement, we can call that 1x. Okay. So for example, if I'm going to put my stop loss at 10 pips. Let's say I come to my trading view and I look at the 10 pips. So for example, the movement, let's say from here to here, we measure that and it comes up as 10 pips. Okay. And I put my stop loss there. I enter here and that would be 10 pips. That will be 1x. So therefore, my take profit will be determined by how much how much risk to reward ratio I'm looking for. So for example, if I'm looking for 1 to 10, or let's say 1 to 3, then I'm gonna put my take profit at 30 pips and my stop loss at 10 pips. Okay, so that would be a 1 to 3 risk to reward ratio. So that means 30 pips is 3x. So that means 30 pips is equal to 3x. And if I go, if the market moves, the currency moves 100 pips, that means it's 10x. Okay? This is a simplified way of looking at it. 10 pips equal 1x, 30 pips is equal 3x, 10 pips is equal to 10x. And now when we are looking at the lot sizes, okay, I'm going to make this very simple for you guys. We simplify this in our master classes, but for the sake of everybody here, so if you use a lot size of 0.01, we are looking at $1, okay? And then 0.0, no, 0.1 equivalent to $10. And then a lot size of 1.0 is equivalent to, after I'm done with this, you guys, you're just going to be patting yourself on the back that you came for this training. This is so simple. We call it KISS. In the Smart Wolf Club, we keep everything so simple that my 16-year-old or my 99-year-old grandmother can trade, okay? Just picking up this information is going to make it. Guys, this is going to set you miles ahead of every single. If you go to YouTube right now and try to understand pips, lot sizes, you're going to be confused. Let me tell you, they make it so complicated. Oh my goodness. Oh, heaven's sake. They make it so complicated. Okay. That's why I tell you that it is very important that you learn. First, dedicate your time to learning. Learning. I don't know. I can't overemphasize this, guys. Learning is gonna set you miles ahead of the whole pack. If you learn, okay, if you learn this, and it is gonna pay you over and over years to come, okay? And excuse me, it's gonna set you years. Okay, I'm real. Some of you are saying I'm a robot. I'm not a robot. Okay, my internet, wherever I am, the internet is very slow, but I'm live. You can see this is a bottle of water, and I'm gonna drink. Mm. So I'm not a robot, right? I'm alive. If you cut me here, I'm gonna bleed. But okay, so let's go over this because once we get this right, our risk management is just gonna be on point. Okay. Because trust me, I have seen a lot of students and a lot of us, even gurus, even serious advanced students making mistakes and blowing their accounts because of what we call rookie mistakes. Rookie mistakes because they do not understand, they forget to calculate their risks properly. Okay. So I have simplified it for you guys. Okay. So from your trading view, once you have your trading view or going, okay, you have your trading view. Okay, so you can see the candles are gonna make moves. The market moves upside and down. Market is not static. Okay, the market moves up and down, and it's because of the emotions. People are buying and selling at the same time. Now, some of you are like, "Oh, I don't like forex." If you've ever traveled from one country to another, you have participated in this economy. Okay, recently we had traveled to the motherland, Africa. Okay, on our way, we visited multiple countries. Okay, we had stopovers in several countries. In every country you go, you're going to spend money. You have to exchange your currency that you have in your pocket to their local currency for you to transact. Okay, that is called forex exchange. So, British pound, you have your British pound. You're visiting Japan. Once you land in Tokyo, the first place you want to go is to the bank or the Forex Bureau, and you're going to exchange your British pound to Japanese yen so that you can transact with the local. Because if you go to the store in Japan, they are probably not going to take your British pound. They're going to ask, everything is quoted in Japanese yen. So you're going to transform your British pound to Japanese yen. So literally, guys, in 1 minute, one soup, one action, you have participated in what we call the forex market. The forex market is the largest, one of the largest financial markets. I think it's the largest. trillions of dollars traded every single day. That's why it is important to arm yourself with this skill, because once you learn how to trade the forex markets, you can pay for your lifestyle. Okay, we are here. It's a journey. We have not arrived yet. Okay, a lot of us are working our jobs because we have not arrived yet. But what is our dreams? Our dreams is to be independent, to be able to make money whenever we want, wherever we want, whether we are traveling, whether we are sleeping, whether we are waking up, you're making money. How are you going to do that? By learning this skill. And that's why we are here to help you, brothers and sisters. That's the main purpose of it. It's a calling for some of us. We learn and teach, we practice and teach, we do and teach. Rome was not built in one day. You have to have the patience to learn. Now, if you don't want to learn, you can pay somebody to learn on your behalf, and you can pay them to take the trades for you. And we give that opportunity in the Smart Wolf Club. We can design a bot for you, an automated bot, AI bot, to implement your strategy. You're happy with the strategy? We use some very smart people who can sit down and put this in a written language, in a coded language. Okay, coded language. Pine, it's called Pine language, Pine scripts. Here is a Pine editor. You can see that. You can see this code right here. You can see the code down here, guys. You guys can see this code. Here, you can see that. VWAP, blah, blah, blah. All this. We have people who are so smart, they can do this quickly in their sleep. They're going to code your strategy for you, and they're going to put it in an AI instrument that takes the trades on your behalf. So whether you're sleeping or you are watching your best cat videos or you're on your social media chit chatting, these trades are being taken on your behalf. So you don't have to do it yourself. So when I say, okay, guys, you have to be here 24 hours learning, no, you don't have to be glued here. But what I'm saying is the best thing is to learn the skill. Okay, once you learn the skill, once you know what you're doing, then you can automate the whole process. Okay, we have bots that can take the trades on your behalf. All you have to do is come in maybe 5 minutes a day or 1 hour a day just to check, make sure everything is kicking and moving on as you want it to be. Okay, so when I talk about risk management, when it comes to trading, risk management is so important, and that's why we have these tools right here. You can see, you come to babypips.com, and they have various tools here that you can use to help you design your trade. Like right now, I was showing you how are you gonna run away from the confusion between pips and lot sizes. So if we said 10 pips is equal to 1x of, you're going to be risking 1x. For example, if I take a stop loss of 10 pips, that means I have lost 1x of whatever money I had traded. If my position size was $1 and I lose 10 pips, that means I have lost 1x, which is 1 times 1. So that means I have lost $1. And if, for example, my take profit was 30 pips away and I was risking $1, that means I have just made 3 times 1, which is $3. You see how easy that is. If the trade, if the candles jumped so fast, for example, let's say there was such a massive movement, like you see massive candles here, and let's say this candle was 100, let's say this movement, let's say I entered here and I let it run all the way down here, and let's say this distance was 100 pips. So then I just did what? It's 100 divided by 10, okay, to get the amount of, so you divide that 100 by divided by 10, it's gonna give you 10x. That's how I get that. This 30 here is 30 divided by 10. It's gonna give us 3x. This one here, 10 pips is 10 pips divided by 10. It's gonna give us 1x. Okay. So if let's say my position size is $100, okay, And I'm going to come down to position sizes, okay? Lot sizes and position size. Let's say position size in terms of your currency. Position size. Let's call it position size. Make it easy, okay? So position size is basically the number of pips, okay? The number of pips divided by 10 times the lot size, okay? So let's say I'm going to say my stop loss, I'm going to put a stop loss 20 pips away, okay? Let's say my stop loss is 20 pips away, and my position size is $10, okay? My position size is $10. Okay, sorry, my lot size, let's say I'm using a lot size of 0.01, okay? So how much am I risking? What is my position size? So it will be that 20 pips divided by 10, okay? It's going to give us 2x, okay? Times 2x times, now, my lot size. So what is my lot size? So if my lot size is 0.01, my lot size is equal to $1. So let's say 0.01 is equal to $1. So then it will be 2x times $1 equals, how many dollars are those? $2. Okay. So if my lot size is 0.01, okay, my position size is 20 pips. If I hit my stop loss, which is 20 pips away, then I am losing $2. Okay. Now, if I was risking more, if let's say I was taking a bigger lot size, let's say I'm taking a bigger lot size and my stop loss is still the same, 20 pips. Guys, are we together, or is some of you are confused? If you're confused, let me know. Please put a comment below. If you're confused, put a comment below. It's going to be 2x. And now let's look at the lot size. If I'm using a lot size of 0.1 lot size, in terms of dollars, how much is that? The 0.1 is the same as $10. So I have $10 per lot size. I'm risking $10 per lot size. And therefore, how much will I lose in total if I hit my stop loss? I will have lost $20, guys. Guys, do you see that? Does it make sense now when they tell you, okay, put your stop loss? Now, in the Smart Wolf Club, in our Forex Trading Masterclass, we do go through a strategy that is used by the hedge funds. You know, the hedge funds, the big companies that you guys give your monies and they handle millions or even billions of dollars for you guys. They're called the so-called hedge fund managers, the guys who go in every morning and take these trades for you on your behalf, and you pay them several millions dollars at the end of the year for doing that for you. All they did was learn these strategies. Now we teach those in the Smart Wolf Club. Okay, so that's why I keep telling you, if you want to learn one-on-one, or you want to be somebody to hold your hand and learn all that it is, go and join the Smart Wolf Club, and you can join the masterclass. Now, those masterclasses, they fill up really quickly, guys. There's so many people. We only have a certain number of coaches. We are limited. We have coaches from all over the world. We have students from all over the world. But those slots fill up really quickly. Okay, and this is not some trick to get you to go there and sign up. Okay, you can go there and find out for yourself. It is very hard for us to accommodate everybody because the classes fill up quickly, and we like a small size class so we can give our best. Okay, so we can attend to everybody's needs. But all is not lost. If you go there and you find that the class is full, you can join the waiting list. Okay, so join the wait list, pen your name, put your name there and your email. When the coaches are free, they're freed, or we are done with the cohorts, because we take our students in cohorts, in batches. if one cohort is done, then we open up some spaces for new students, and therefore that way you can get in and be trained by some of the best coaches you can ever find. Okay. So anyway, let's go to the third example. Stop loss. Let's say my stop loss is, let's say, 20 pips. I'm going to keep it to 20 pips. Let's say my stop loss is 20 pips away. Okay. Divide by 10. It's going to give me a 2x. 2x, that's a risk. I'm going to, we call it risk to reward ratio. So right now we are looking at the stop losses. We are looking at the risk management part, where how much are you willing to risk before you take a trade? You're going to make that decision. You must have a pen and paper. Before we go to trade, we always have a pen and paper. Right here is a notebook. It's $1.25. This notebook. The pen is about 33 cents. So with $1.50, you have all the materials that you need to start trading. Okay. So every single trade that we take a note. You can even see here, there was a trade that we took this morning. You can see all the notes that I made here. Okay. So I write, everything is written down. So if anything goes wrong, you can go back and see where you went wrong. Where did you make the mistake? Okay. So you write it down. So first, before you even take a trade, this is the preparation before you take a trade. So if you're going to start trading, let's say at 9:30 a.m., before 9, maybe 9:15, 9:20, you should be on your notebook and map up all your trades, map your risk, how much lot size you're prepared to take, how much pips is your stop loss, how much pips is going to be your take profit. So all this decision has been made by you. Okay. And then we're going to see what the market is giving us, because again, we have to tailor make our risk and our profits based on what is going on in the market. If the market is extremely volatile, moving first based on our TA is technical analysis, and let these terms not scare you, because I'm going to simplify this. I'm going to show you the KISS strategy, the keep it simple, stupid strategy that we use in our uh, Smart Wolf Club that has helped a lot of our students. Although those of you come here claiming that you're blowing your accounts, a lot of you have lost your accounts. Then we show you how to mitigate that, how to manage your risk properly. And this is so important. This part of the lesson here is crucial, guys. If you master this, my work is done. I can just go home and have fun, have a glass of wine or whatever it is. It's done. Okay. If you master this, if you assure me that you have mastered this, you understand what I'm talking about, my work is done. The rest we can show you on the fly like this, quickly. All right. So we are talking about position sizing here, lot sizes and the pips. Okay, so we have defined the pips. Now, somebody is asking, what is a pip? My goodness, pips. Okay, let me take you back to TradingView. What are pips? Somebody is asking, what is a pip? Now, the pip is like the smallest movement that the currency pair moves. For example, you can see from here to here, this candle here. This is a red candle. That means the Japanese yen here is stronger than the GBP at this particular time. What is the time frame? Or the 1 minute candle? This is each candle here represents 1 minute in time. So the candle moves, the asset moved from up here where it started from the top to the bottom, from there to there. And if you go to the right hand side, I mean to the left hand side, you can see there's actually a price. You can see that if I put a line there, if I bring a line and put a line there, you can see it was 197,430. Okay, that was the value, GBP, JPY. It was 197,430. And it moved all the way to down here, closed down here, which was 197,360. From 197,430 to 197,360. So you can see it lost value. It went down. That's why we have a red candle. If it was green, then it will start from the bottom here at 197. And you can see they repeat this. You can see this has repeated itself right here. You can see at this level here, this candle green started at that level. It went up and closed up there at 197,404. It started at 197, 197,360 to 197,403 right here. You can see, so there is again, there was an increase in this pair right here. So the GBP was much stronger going up. Okay. So so guys, you can see when we talk about pips, it's the slightest movement, and you can use the ruler feature here. You see this ruler here? You can bring that to measure the movements. We can bring a ruler, this feature here, to measure the movements. You can see it tells you if we are moving from there to there. It can show you from there to this size here. You can measure using the ruler from there, and we stretch it. Come on, we want to stretch it down. Okay, there you go. You can see if we stretch it down, it tells you how much that movement was. So you can use the ruler to measure. So it says -7. So it went down, -7.7. So that's the number of pips that this thing from the top to the bottom was a loss of 7.1 pips. 7.1 pips. So the pip is actually measure the slight movement in the currency pair. Okay. So now that we know, we talk about pips all the time, and you can do a Google search. You're going to see a lot of stories about pips. And if you want to learn more, you can come here. Baby Pips is going to teach you all that stuff. Okay, learn crypto, learn Forex. Okay, right here, you can go through what is a pip. They explain that vividly. Okay, they will show you very vividly how to trade. It shows you right here. Start the course. Okay, that's Baby Pips. Look, and what's the first thing that comes on? Psychology. What is Forex? How do you trade Forex? Can you trade Forex? Can you Now, if you don't understand any of this and you need our hands, you can join the masterclass. That's what I keep saying. Just join the masterclasses. But you have free resources here which can get you up to speed, guys. Okay? So anyway, so let's go back to this so we can conclude this and then go back to just how you're going to take a trade. Anyway, so we talked about pips. Okay, so pips, every single pip measures the movement of the currency pair. So if it moves 10 pips, that means if I'm trading and I say, okay, this currency moved 10 pips, so that is 10 divided by 10, which gives me 1x, okay? 1x of my, if I'm calculating my position sizes, I'll be looking at bunches of 10 pips. Every 10 pip is 1x. Every 10 pip is 1x. So if the currency makes 100 pip movement, then I'm talking about 10x, okay? So if I started at a line here, if let's say I started from one set of a line and I move all the way down, then that is what we are talking about, okay? That is what we okay, so we start up there, we go down here. So if we start there and go down there and it goes up like that and it goes down like that, this is a ranging, okay? That's a ranging movement. So if we measure from there to here, let's say this is 10 pips. If that's 10 pips, so if we entered a trade right there and we exited right there, that means we have gained. We entered the trade here. We took a short trade. These are called short trade because it's going down. If it was going up like that, we call it long trade. Okay, so when we be talking about long trades, we are talking about going up, which is a buy. and we are mostly looking at green candles, okay? Now, if we go this way downwards from our starting point, that is a sell, that's a sell, and that's a short trade, okay? That's a short, okay, if it can write, okay, that's a short trade, okay? So sell is the opposite, going down, the short trade. Going up, it's a long trade. Then here we could take another trade going that way. That would be a long trade. Then we here, let's say we can take another trade. That would be a short. So when people talk about shorts and longs or a buy and a sell, basically when we talk about a buy, it means we are going up. So like from here to here would be a buy. From here to here, down here, would be a sell. This is a sell. And then here we're going to have another buy. Here we're going to have another sell. So here we are selling. Here we are buying. Now, looking at real life situations, when the price of something is low, what do people do? We buy on low, sell on high. So this is a high price. This is a low price, guys. So we are buying on low, we are selling on high. Okay? So when it is high, we sell. When it is low, we buy. Guys, that is a real life situation. When you go to the store and the product is $1,000, you come back next week, the product is $200, then you're probably going to buy it at $200 and hold on to it and wait until it gets to $1,000, and you're going to sell it at $1,000 and you make $800 profit. Okay, I bought it at 200. Okay, I hold on to it, doesn't matter how long. That one will be determined by the demand supply rules. Okay, I sell it at 1,000. My net here is 800. So that's my profit, tech profit. Okay, so now when we talk about uh, what we are saying here, so if we lose 10 pips, if we lose 10 pips, we gained 10 pips. So that means if I had taken a trade here for 0.01 lot size, what did we say 0.01 lot size is equivalent to? Is equivalent to $1, okay? Is equivalent to $1. Okay, so $1, and we gained 10 pips. So that means 10 pips divided by 10, okay, gives us 1x. So it will be 1x times my lot size in terms of dollars, which is $1 times 1 is equal to $1. So I just made a profit of $1. Okay. So let's say if this movement here is 100 pips. If from here to here I gained 100 pips, that would be 100 divided by 10. That will give us 10x times the lot size in terms of dollars, which is $1, which was the real lot size was 0.01 lot size, which is $1. Okay. This was my take profit right here, guys. This was my entry point right here. I entered here and I took profit here. So I put my take profit here. I'd said my take profit at 100 pips. I wanted 100 pips. Okay. So if the market really rallies all the way down here and I actually take profit here and I gain the 100 pips, I divide that by 10, it gives me 10x. And if my lot size was 0.01, that means I was dealing with $1 lot size. It will be 10 times $1, which is $10. Now, guys, I just made $10. If this was 1 minute, that means I made $10 in 1 minute. If it took 2 hours to move from here to here, that means I made $10 in 2 hours. Okay, which might not be that exciting, but it can be very exciting if this happened in 1 minute. Okay. So 1 minute I make $10. Another minute I make another $10. Another minute I make another $10. In 1 hour I make what? 60 times 10, I make $600. That is if everything goes as I'm saying, like nothing, no losses or anything. But that's not how the market is. The market is gonna give you a loss at some point. Okay, so you're not gonna win 100%. There's nothing like that, and that's where we talk about the psychology of trading. Okay, so guys, you can see what I'm talking about now. Okay, so literally, what we are saying is, okay, so guys, you see what I'm talking about. So let's say now I come, let's go back, let's erase this and explain this one more thing, and then we'll go back and see if we can just show you how we could take a trade, like on GBP, JPY, and then we'll call it a day for today, and then we'll continue tomorrow. These live tradings are going to continue every day until uh, the master teacher comes back, because we are here to help the community, guys. So just make sure you subscribe to our channel if you're watching this live and you have not subscribed to the Smart Wolf Club. So we're going to call this part one. There's going to be a part two, part three, until everybody can trade comfortably. And guys, if you go out there and start trading and start making money, please come back and say thank you. Okay? Please buy us a cup of coffee. There's no problem. We like coffee. We're going to take a cup of coffee from you. Okay? And then we can be smiling all the way to the bank. Okay? So there we go. So the one thing that I want to tell you guys is, let's go back here and let's break this down. So we've talked about lot sizes. Is anybody still confused about the lot size? So how much are you going to know how much to risk? Again, this is determined by your account size. Let's say I go now, I've jumped a lot of things. Okay, I have assumed a lot of things right now when I say that. Let's say I go to my trading platform and I put $100. Okay, let's say $1,000. Okay, this is money that I can afford to lose, because anything you're gonna put in the trading platform is money that you can afford to lose, because we don't control the markets. Anytime you invest some money into something, whether it's a business, online or offline, just know you stand the risk of losing your entire investment. And particularly with trading, it's very risky because the market changes up and down, up and down. That's why you can see the candles behaving like this, because this, you can see it's up and down, red, green, red, green. The market is not static, because some people decide, okay, for whatever reason, they want to sell. Boom, they move the market downwards. Some people decide, okay, we want to buy now. Boom, it moves the market upwards. So it's up and down, up and down. And that's why we have the charts going up, wavy, wavy, wavy. See, look at the charts. They're not static. It's up and down, up and down, up and down. Okay. But then there is what we call the general direction. You see, like now I zoomed in here. This is 1 minute chart. You can see I've zoomed here way, way far. You can see here it was, what time was this? 3, 3, 9, 15. So from 3 a.m. to 15, this is 15 here. 15 is what? 3 p.m. Okay? So 3 p.m. From 3 a.m. to 15 p.m. I mean 3 p.m. That's like 12-hour session. You can see, but you can see the general direction was an upward direction. You can see it's kind of moving up. It's up, up. So most likely somebody who entered here for a long trade or buy was in the money. If you had entered a trade here at, let's say, 3 a.m., you came in here and took a long trade, you are probably hit your take profit at this level, depending on how many pips you had decided here, because this is going to tell you how many pips there are. Okay, let's say we put that line there and we bring another line. Now we have two lines. So let's say between these 2 points, so let's say somebody entered here and they got out there. So how many pips are those? You can put a ruler. You can measure this. Already you can see up to this point, it's already 230 pips. Okay, you can already see just by being at this level, it's already 230. If we go all the way to the bottom, you guys can see it's 330 pips. 330 pips. Okay, so let's just go back to our calculator and say that movement was 330 pips. Okay, so let's say we entered 1000 and we used a lot size of, let's say, 0.01, and we had 330 pips gain. So how much money did we make? This one here is equivalent to $1. Okay, and we have 330 pips, so you're gonna go 330 pips divided by 10. It's gonna give us 33x. Okay, so times, this is 33x, 33x times the dollar. It's gonna give us $33. Okay, so that's what we would have made in that trade. Okay, that's how much we would have made in that trade. This was, let's say, our take profit. Okay, now let's see what was our stop loss. So let's say our stop loss was, let's say we had put a 10 pips stop loss. Okay, so here we are talking about the risk management now, guys. I'm breaking it down for you guys to understand. Let's say our stop loss was 10 pips. So we came here, all right, right there. We took our trade. So we put a long position there. We put a long position there. Okay, there we go. There we go. We put our long position there. And let's say uh, we're talking about what? Okay, let's say 75. We want to have it very close. So let's say we put it at what, 10 pips? You can see the numbers there. They are very, very tiny. So let's say we have it so close, right there. 16, amount 75 pips. 14, 14 pips. We want 10 pips. We want 10 or 20. Okay, let's go 10 pips. Right there. That's 10 pips right there. So let's say we had our stop loss that close right there. Tight stop loss. So that means how much were we risking? We were risking 10 pips. This is 10 pips divided by 10, which gives us 1x times the $1, which gives us $1. So out of our $1,000 account, we were only risking $1 to make $33. That means our stop loss was at 10 pips and our take profit was at 330 pips in this case. So that means we are only risking $1. That is all I was prepared to risk, $1. $1 out of 1,000, that is a very small percentage. Okay, I was risking a very tiny percentage of my account. Okay, okay, I was only risking $1. Okay, So I risked $1 to make $33, which is a risk to reward ratio of 1 to 33. So when people start talking about risk to reward ratio, this is basically what they mean. Risk to reward ratio, R dot dot R. So I'm risking 1 to 33. Now, what if I was risking 1 to 10? Then that means my take profit here would have been 100. 100 pips. Instead of 330, I would be at 100 pips. Take profit is 100 pips. I'm risking 10 pips and I want to get 100 pips. That means I'm risking, my risk to reward ratio is 1 to 10. I can take this all day long. Okay. If I was risking 1 to 3, like what most people will tell you, then that means my take profit would be at 30 pips. Okay. So that means if I was taking this trade, I would probably have taken profit down here, all the way down, just 30. You can see where 30 is. You can see where the 35 now, 30, 30, 30. There we go. So I've just taken this short trade here and out of the market. Okay. So my risk to reward ratio should have been 1 to 3. Okay. Now, with that, gentlemen, am I allowed to call it a day so we continue tomorrow? If you are confused, we're going to brush over this tomorrow during our live, in the next live. Okay. So I'm going to call this part 1. We're going to have a part 2, a part 3, and we will continue like that in this series until we get you trading profitably. Okay. The only time we're going to stop talking about this is when you guys tell me, if I see a number of you commenting below saying that you are actually making money using our strategy. But how are we going to trade? How are we going to trade? We used a very simple strategy. Okay. Very, very simple strategy, guys. Very, very simple strategy. We are using what we call the VWAP session. Okay. So this indicator here is called the VWAP session. Okay. So basically what we are doing is, if I can erase this, okay, let's stop that. Can we erase the whole thing? Presentation. Okay, let's see if it can erase the whole thing. Okay, maybe we do this. There, voila. So just by restarting it, it erases the whole thing. So, okay, what was the question again? I lost my chain of thought, guys. I'm human. I'm not a robot. That's why I keep telling you. What was I going to talk about? Oh, yes, the view up. Okay, we're talking about how you're going to actually take the trade. Okay. I want to show you something. Okay, I want to show you something really simple. So let's say the market goes like that, it goes like this, it goes like that, it goes like this, it goes like that. And then we have this level there, we have this level there, we have this level there, we have that level there, we have that level there. So we have that level there. We have this level here. We have that level there. You're just drawing your lines. You have that level there. Okay, so these are basically support and resistance, support and resistance, support and resistance, depending on where you're looking at it. So here is what we call this higher low and higher low here. These are higher lows. This is a lower high, and a high over there. So you can see the trend is actually an upward trend. Okay. So in a case like this, I'll be looking for the buy, or what we call the long trades. Okay. So for me to enter for a long trade, you see this goes up. I missed that. So I'll wait for it to come down here. It bounces up. It bounces. It starts going up, and sometimes it's gonna retrace and then shoot up. Okay, so when it comes here, it goes up and then it comes down. So I'm going to enter here for a long trade. Okay, and I can use this the previous low as my stop loss. So that would be my stop loss. And the previous high right there can be my take profit. This is bare bone basic trading. Okay. So I'll have this as my stop loss. This is my stop loss. So how many pips are here? Maybe 20, 10, whatever the number of pips they are. And this is going to be my take profit. So this again is going to be the number of pips. Now, this here is going to be determined by my risk tolerance. How much am I willing to risk? So again, if let's say this is 100 pips, let's say from here to here is 100 pips. Okay. And let's say my account is $1,000. Right now, I go to my trading platform, I put in $1,000. I'm ready to risk $1,000 for my trading. So let's say I come here and I realize, oh my goodness, this stop loss is really, really big. It's 100 pips. Okay. I'm just giving you an example. Okay. So if I take a lot size of 0.01, which we said is equivalent to $1, that means for 100 pips, you're going to divide this by 10. It's going to give us 10. Okay, 100 pips divided by 10 is going to give us 10x. So that 10x times $1 is going to be $10. So that means if I lose, if for whatever reason I go in here and the trade decides, this trade decides to go the opposite direction. I mean, instead of it going up for me to take profit, it decides to come down here and hit my stop loss. I'm going to lose $10. Now, $10 out of 1,000 times 100 in terms of percentages is 1%. Okay, so I'm risking 1% of my account. So when people tell you I'm only risking 1% of my account, that means I've already decided my risk tolerance is 1%. I can only risk between 0.5% to 1% of my account. Therefore, in a case like this, I have $1,000 right here. I'm going to put such a long stop loss. I'm going to say my stop loss is 100 pips, okay, for example. And my take profit is up here. So how many pips is this? Okay, this looks like, okay, let's say this is twice the size. Let's say this is 300 pips from here to the take profit level here. From this low here to the previous high is 300 pips. Again, I have 300 pips divided by 10. It's going to give us 30x. So it's 10x to 30x, which is the same as 1 to 3, guys. Okay, you can easily work out that simple maths. Times $1, it's going to give us $30. Okay, so if I win, I make $30. If I lose $10. I can do that all day long, right? Because I only need one trade. I need to lose 3 times. I can lose up to 3 times. And if I get one win, I wipe my 3 losses. Because if I win, I make $30. If I lose $10. So I can afford to lose 3 times in a row and still be profitable when I win just one time. So I can afford 3 L's and 1 L and 1 win, and I'm still breaking even. See? Now we are becoming professional traders. We're starting to think like the hedge fund managers. We're starting to think like a trader, professional traders. Now, the only thing you guys have to do is to go home and go over these notes again. Okay, go and rewatch this video. Take notes. Put it in your own thinking. Put it in your language so you can understand it. Because my language might be different, but put it in your own simplified form. And then tomorrow, when we meet again, we're gonna go into trading now proper. We're gonna go into setting up your trades. But before we meet tomorrow, I would like you to do one thing, okay? go ahead and, because tomorrow we're going to move a little faster, go ahead to this link right here. Below this video, there is a link that says get your Forex demo trade. Okay. Go and get your Forex account right here. Get the demo. Okay. Use this link. So you're going to click the link and you are going to sign up for this platform right here, because we're going to use that platform to start taking the trades. And I'm going to show you how you can start trading. Now, with that, ladies and gentlemen, I'm going to come to the end of my training today. And let me know in the comments below if there's anything you guys want me to improve on. Okay. We've been training for many, many years. Some of us have been online since 1998. But if there's anything you did not understand, or you think we could do better, or if there was any confusion, you need some clarifications, please leave the comments below this video, and please share this with your group, okay? Because we want to touch as many lives as possible. During the pandemic, it touched really close to our hearts, and we see brothers and sisters suffering. And we decided we're going to go online and share our knowledge, okay? What we do every day, we're going to share this with the public. Courtesy to our students, we're going to share this for free, courtesy to our students. Now, if you need hand holding, not everybody needs hand holding, but there's people that need hand holding. They need to be trained. They need to see it in different fashions. Please go ahead. Don't hesitate to click this link right here. Okay. Click that link. It takes you to the Smart Wolf Club membership. Okay. All you have to do is put your name, your email address, and join the masterclasses. Once you get to that page, pick your masterclass. Okay. We have so many of them. The Forex Trading Masterclass is going on right now. Okay. So go ahead. They go very fast. Okay. We have a lot of students. We have coaches from all over the world. So you can imagine how many people are getting on there. Go ahead and sign up for the masterclass. Now, if you go there and find that it is closed, don't give up. Okay. Don't give up, guys. Put your name and your email address. Join the waiting list, because we go on priority. We go through the waiting list. As soon as the cohorts, the classes are done, we enroll new students. So you're going to be the first one, among the first ones to be enrolled. And you're going to enjoy the training and learn, work one-on-one with some of our best coaches. Okay. So guys, I think I should end it here, unless some of you have any questions. Let me see. Does anybody have any questions? Everybody's saying, wow, it was nice. Oh, nobody has ever. Okay. Somebody wants me to clarify something about this pips and lot sizes and all that. I kind of try to make it simple for you guys to understand. Okay. So if we talk about the currency moving 10 pips, okay, you'll hear people say, put your stop loss at 10 pips, 20 pips. What does that mean? Okay. So if somebody tells me put my stop loss at 20 pips, I divide that by 10, it tells me it's a 2x already. So whatever my lot size, if my lot size is 0.01, which is equal to $1, or 0.1, which is equal to $10, and if we continue further here, if you've seen some of the gurus taking trades with numbers like this, okay, you see numbers like that. And you even see some people take 100 lot size. That means 10K. Yeah. When you are dealing with big accounts, some people are taking this type of trade. 10K. See? It quickly starts making sense. If you're trading a 1.0 lot size, if you're trading a standard lot size, which is $100, standard lot size, this is called the standard lot size. Then there's a mini and the micro. This is the standard. Standard, when you hear terms like this, standard lot size. This is a standard lot size. This is the mini lot size, okay? And this is the micro lot size. So as a beginner, I am not imagining you want to start with a crazy amount. You're probably going to be dwelling with the micro lot size. But again, I have just demonstrated to you guys that you can still make a lot of money just dealing with the micro lot size. It's all depending on how many pips you collect. As you can see here, we actually made $30, for example. If this movement was 300 pips, and we're using the micro lot size. The micro is the 0.01 lot size, which is equivalent to $1. Okay. If we have a 300 pip movement, that's equivalent to $30. So depending on how many trades you're going to take, you can make it start making sense. $30 a day, guys. For example, if you just take one trade and you make $30 every single day, guys, let's bring a calculator. $30, okay? Sorry. $30, and let's say you take how many trades per week? You take 3 trades per week. Okay. You can't trade every day. Okay. Most people will not trade on a Monday. Most people will not trade on a Friday. Maybe you're trading on Tuesday, Wednesday, and Thursday. So you're only trading 3 days Forex. So that will be 30 times 3, and that gives us $90. Right there. $90 in a week. Multiply that by 4 weeks in a month. You're already at 360. Now, that depends on your account. Some of you will come in and want to risk more. So let's say some of you are in here and you're risking you're doing the mini lot size. Instead of the micro, you're doing the mini. So multiply everything by 10, okay? Because the micro is 0.01, the mini is 0.1, and the standard is 1.0. So this gives you an equivalent of $100. This is an equivalent of $100. This is an equivalent of $10. In terms of dollar sizes, this is an equivalent of $1. Okay. So let's say some of you are already risking 0.1. Okay. You're taking this type of lot size, 0.1, where you're risking about $10 per lot, per pip. Okay. $10. If you're moving 100 pips, divide by 10 times 10, that's $100. So if it goes 100 pips in the opposite direction of your trade, and let's say your stop loss was $100, you're going to lose $100. If your stop loss was 20 pips, then you're going to lose $20. Okay. You see what I'm talking about? So now the numbers start making sense. So, and if it goes to your take profit using this lot size, it will be 300 divided by 10 times 30 times 10, because again, the lot size is equivalent to $10. You're talking about $300. So here you are making $300. Now, if you come here and make $300, if you multiply that by 10, you're talking about 3,600 in a month. Okay. Just increasing your lot size from 0.01 to 0.1, taking a bigger risk. Okay. You have increased your paycheck. Now, 3,600 per month can actually free a lot of people. This is freedom for a lot of people. Multiply that by 12 months, you're already making 43,200 per year. Now, this is what most people make. Most professionals make this per year in very few countries. Maybe in the US, maybe in Europe. Very few professionals make this amount of money. Most people live under $1 per day. Yeah. A lot of people in the world, we've been to many places. We come from places where people live under $1 per day. Some of us come from places where people live under $1 per day. Okay? It's not a joke. I know some of you, we have some of our coaches in the US will tell you $1 per day is nothing. A dollar cannot even buy a cup of coffee. But that's a small percentage of the population. Majority of the population live under $1 per day. That's why our examples, if you have watched our trainings in the Smart Wolf Club, we talk about trading $10 because $10 means a lot for somebody who lives under $1 per day. $10 means they literally had to save for 10 days. They had to save their entire salary for the day for 10 days to actually raise $10. Think about it that way. So that's why we cater for all these students. We have students here who live under $1 per day. If you can show them to make that $1 per day, you're freeing them from the jobs that they do. So, guys, I think we should end it here and then we continue tomorrow. So, tomorrow we're going to be continuing with again Forex trading for beginners, Forex trading for beginners. So, if you consider yourself a beginner, or if you are out there and you're still not profitable, then you are in this group. Those of you who are profitable, probably this it may not serve you very well, but if you want to refresh on your skills, Forex trading for beginners, beginners, or people who are transitioning from other markets to Forex. So you can come on here and join. So tomorrow we're going to be looking at part 2. And then, of course, we're going to go to part 3, part 4. And we're going to have the playlist here. And this playlist is going to be called Live Forex Trading. Okay? Live Forex Trading. Live Forex Trading for beginners. Let's make it beginners so everybody knows it's for beginners. So if you don't consider yourself a beginner, you can save yourself a hassle because this is bare bone basics. For those of you who want those advanced, but we're going to move from beginners to advanced in the same series. We're going to be showing you advanced strategies. We're going to intertwine our training such that it caters for you. By the time you're done with this series, you should be able to profitably trade. And 2025, we want to be seeing a lot of our members quitting their jobs that they don't like. If you don't like your job, I mean, we have a lot of students here who are professional, they like what they do, and we respect that. But we have those who come and they say, you know what, the only thing I want to learn how to trade is because I want to quit my job. I don't like the people I work with. I don't like the boss. I want to change my career. I don't like what I'm doing. I just want freedom. And most people, when we ask them, what do you want? They want to travel. So they want to learn a skill that can allow them to be free, travel, trade from wherever they want, whenever they want, sleep, make money. When they're sleeping, they're making money. And that's where we are. This is a journey. We are not at a destination yet. I keep repeating this. We are in the journey together. It's not like us versus them. No, it's not that situation of guru versus students. And then the guru is just taking your money, teaching you things that they are not even doing. Okay, they are making money from you going through their causes. No, it is not the case of us versus them. It is us, all of us. It's the case of all of us. We are in the same boat. All of us. All of us are here in this boat. We are learning together and we are moving together towards the word is we are moving together towards this word, this famous word right here. You like it? You like the sound of this word, guys? You like the sound of that word? This is a D for David. This is an F for freedom. This is what we are all looking for, freedom. And with that, guys, let's meet tomorrow during the live. Don't miss the live. Make sure you participate in the live. And may the Almighty be with you. May all the students who have paid attention to this training be successful. May the markets be good to all of us. In the belief of the power Almighty, I pray. Amen. Thank you, guys. And I think I will see you. Thank you, guys. I think I will see you tomorrow. Excuse me. I will see you tomorrow during the live. Stay good. Be pleasant. Help the needy. Love your neighbor as you love yourself.